The Fed's policy error means there is no escape until the Fed causes a recession. As inflation, jobs, everything remains a little bit higher than they anticipated. Surprise there. So let's jump in, take a look, and see what the markets are doing today and what is going on with the Fed. So the market finished pretty flat today overall, slightly up about 0.4 on the NASDAQ. Which is especially surprising given the fact that Powell came out for the second day and said we're going to have to increase the pace of rate hikes, and that they're definitely going to have to stay there higher for longer, and that the terminal rate that they're projecting is going to have to come up as well. In his testimony, he said there is no exit from this until, or economists are saying there's no exit from this until the Fed Chair Jerome Powell creates a recession, until unemployment goes up, and that is when the Fed rates will stop being hiked. He stressed that the Fed's lack of clarity on ceiling of interest rate increases the absence of such economic slowdown. They have no idea what the top rate is because they keep increasing it at every meeting, or where inflation settles down without a recession, because you can't. The economy is too strong. People are still spending. Jobs are still tight. Prices are still going up. In a lot of areas, housing market is still stuck without any inventory, and with prices being escalated, it's very difficult, if not impossible, for anybody to predict, what's going on, where, how deep, how far, how long, whether or not inflation is going to come down, how fast will it come down, where will it stop when it does come down. The big thing is this is all the Fed policy error because they did not hike soon enough, fast enough. They ignored inflation to begin with. Then they ignored the fact that inflation was going back up again with the disinflationary comments of the last testimony that Powell had. This week, he comes out and acknowledged that inflation is still much stickier and hotter than they would like. And they slowed the pace of rate hikes too soon. So they did not start hot enough. They didn't start with high enough rates fast enough. They backed off too soon. Now they're going to have to go back up again. A lot of the market economists and pundits are now saying that the Fed is going to lose even more credibility if they increase the rate hike back to 50 basis points because they slowed down too soon. But the Fed is and has been saying we are data dependent. We're going to respond to the data. So I think it actually will show more credibility if they say, hey, the data came in hotter, it was coming down, now it's going back up. So we're going to fight that. We're going to go with 50 basis points. So the market is kind of pricing that in. But I don't think that is a credibility issue. I think the policy error was they ignored inflation and denied it to begin with. They didn't start high enough, fast enough, and they came down too soon, backing it off to 25 basis points. Again, whatever data they're looking at is inaccurate and wrong, and which is, pretty surprising considering the budget that they have for analysis. But again, it's economists and it's academics. It's not, real world business people looking at these numbers and paying attention to what's really going on Main Street, that's really affecting working class people out there who are being hurt the most. And that's the most dangerous thing that they're dealing with right now, as we heard in his testimony. But anyways, here's the Dow kind of, still in this range here. Basically Dow, NASDAQ, S&P just moving sideways, as is Bitcoin. Here's Bitcoin right here, still kind of ranging, obviously testing the lower level of this recent price action here. The question is, where does it go from here? The probabilities look like more downside, potentially a little bounce before that continuation. So it's interesting that this area here looks like a mini version of this area here, where you had the double top here, you had a double bottom basically here, and then continuation for downside. So if you look at this here, you've got double top here, you got double bottom here, and then potentially, more downside to go back and ultimately test the bottom right there. Obviously, it doesn't fall off like that, but that $15,000 range. So it'll be interesting to see, what continues to happen. And of course, all of this is data dependent, just like the Fed, right? Bitcoin is data dependent, just like the Fed. It's a risk asset, so it's going to respond meaning that, this is the highest risk assets, highest spectrum of risk assets, Bitcoin and cryptocurrency, which are two very different things. And, it is liquidity driven. So it takes more new capital to drive price. People are worried about the market, afraid of it, and it's just a risk-off environment right now. We're still in a bear market. We're still in a Fed tightening cycle. We're still in a recessionary, cautionary cycle. We're still in a high inflationary cycle. So until inflation's down, the Fed can stop, and we've avoided any kind of a deep recession or any other kind of a big policy or a global geopolitical threat like World War III or something like that. We go to war with China, things like that. Then, or if Binance or Tether implodes and something like that, then the markets can, test these bottom levels and just kind of range out for a while and wait to see what happens. But once we get everything under control and the geopolitical threats are off the table, then I think the markets can kind of recover. And actually, the geopolitical stuff, if it stays like it is, the markets aren't too concerned about that. If that escalates, obviously it'll, send a panic and shockwaves through the market. But in general, the biggest thing that the markets are looking for is certainty from the Fed, certainty that inflation is coming down. The Fed stopping, pausing, backing off. They're not going to retract unless we do fall off a cliff, the economy goes into a deep, deep recession, and everything just starts to implode. Then they might, stimulate again. But without a huge, so a lot of people are cheering for the Fed to reverse course and start cutting rates and stimulate. That's not going to be a good thing for the economy or stocks or earnings necessarily. So usually you got to go through the pain first for the Fed to start pumping the markets and juicing it back up, like we saw the bottom of 2009, like we saw the bottom of 2020. So this certainly is not a bottom like that. So that could potentially happen, and maybe a retest of the lows is what happens, or you break the lows, go down, set some new levels. Then the markets can run off to the races again. So right now, risk off, still in a bear market, consolidating, retest of the lows is what's likely, not a bull market yet. So these are the things I'm looking at. This channel is all about entrepreneurship, real estate investing and development, buying and building companies, growing and scaling your business, generating cash flow to invest in other assets. So whatever that business may be, it's all about, creating cash flow to invest in other assets, to grow and scale, sustain your wealth for generations. That's what this channel is all about. So we will see you on the next video.